Hello and welcome to The Market Capitalist. I am Domenico Johnston. Thank you for tuning in. Today we're going to talk about market sentiment and the public sentiment. Very basic video blog here, but I think it's very important because you'll hear throughout your time investing that the public feels that the economy is going down, is in a worse state than it was 3 months ago, whatever the perception may be. And what really matters is looking at the source. Who's being asked? Is it the public, as in anybody off the street, or is it professional investors that are managing funds that have significant amounts of assets to put in or out of the market? The market isn't a democracy. It isn't one investor, one vote. It's one investor, how much money do you have, really? I have a certain influence in the market based on the funds that I have, and you have a certain influence on the market based on the funds that you have. Managers of money have a significantly greater influence because, well, they're essentially pulling money together from who knows how many individual investors and controlling that. Now, specific fund managers will have specific focuses, so therefore they're not totally free to do what they will with their money of you or another person, but their opinion counts significantly more than anybody off the street saying, hey, I think the economy sucks. Hey, I think the economy is great. Consider that. So when you hear numbers quoted in terms of market sentiment, so really it's the psychology of the market. Are people feeling good about the market? Are people feeling bad about the market? It really pertains to who has money to impact the market. Because I can feel bad all day, but if I don't have any money, or if I'm not willing to put any money in the market, well, it really doesn't matter. Market psychology I put a large amount of weight to because if you're looking, especially in the short term, people's perceptions about where we're headed in terms of the economy or where a certain sector is headed can have a significant impact on the price valuations of those companies or the sector in general. And therefore, it's going to impact your ability to get in or out of a stock if you're in a shorter duration or if you have a short time frame where you're saying, I need to get out of the stock within 6 months. Well, what's the perception of the market as a whole? And the market as a whole being those professional investors, not the public as a whole. In any case, one last point before I wrap this video segment up. When you hear, typically it's bullish or bearish, right? Are more professional investors bearish or are more professional investors bullish? And when you hear one or the other, what should your opinion be about that? I'm not telling you what your opinion should be, but kind of giving you maybe a couple guideposts to help you along the way. When I hear that everybody or a vast majority of investors are bearish on the market, I don't necessarily think that's a bad thing, like I should run away from the market. What it tells me is that probably you're hitting close to a bottom because it's kind of like momentum. Everybody's turning bearish, everybody's turning bearish. Well, there's a smaller and smaller pool to turn bearish from. Once you get to that point where it stops, then you essentially reach bottom, and as a few investors start increasing their bullishness from bearishness, then you're essentially seeing the market turn around and go back up because more people increasingly feel bullish, even though it might not be the majority. Conversely, on the bullish side, say there's a vast majority of investors that say, I'm very bullish on the market, I think we're going to go up. But there's a very small percentage that are bearish. You might be actually at the point where the market is topping. Because even though you may sustain that majority for a while, as the pool of bearish investors increases and thinks, oh, the market's overvalued, you have increasing numbers of people that have significant stakes in the market, selling, getting out of the market, repositioning in some way, and therefore driving prices down. So, not necessarily on paper it's straightforward, where you see, oh, everybody's bullish, this is very bad. Everybody's bearish, this is very bad. No, it might actually be a great opportunity for you to get into the market at a low spot and therefore take advantage of any gains that are going to come afterwards. But That's not absolute, that's just something to consider when you start hearing things that make you think, everybody's bearish, I better stay out. So again, thank you for tuning in. Comments always welcome. If you have any comments on the other blog posts that I've posted, go ahead and leave them as well. I appreciate all of them. Thank you for tuning in. We'll see you next time.